to us about new developments in capital markets. This is a subject in which we should all be deeply interested with the recent unpredictability due to COVID-19 pandemic and to understand how the capital market has responded to an event that affects the whole world. Mr. Gouri holds a master's degree in business administration in international business from the Faculty of Management Studies, BHU. He has more than 15 years of experience in Indian capital markets and has worked in various roles at NSE. He has comprehensive knowledge and understanding of listed derivatives and exchange traded products. His specialties include listed derivatives, business development, new product designing, and derivatives pricing. In his current role, he spearheads of all the exchange products, education initiatives, and SME listings in Southern region. Before I hand it over to our speaker, I have a few quick reminders. We have quiz questions which will be posted by our speaker, and you can answer them on session chat. And also please use the session chat so that you can post your queries if you have for our speaker. So without any further ado, on behalf of the entire WWCode, I'd like to extend a warm welcome to our speaker, Mr. Gouri Shankar. Gouri, over to you.
Thanks, Vinitra. Good afternoon, everyone. I hope you and your loved ones are in the pink of health and doing well. It's a pleasure to be here on this webinar presenting on new developments in capital markets. And I would like to thank the organizing team at WWCode Connect 2020 for inviting us to be part of this great initiative. So whenever the topic reforms and developments in Indian capital markets is talked about, a reference to the two eras gets quoted always. Era prior to NSE's incorporation and the era post NSE's incorporation. Though this is a very dated development, yet even today it gets a mention in all similar forums as it had such a deeper and great impact on Indian capital markets, which changed the way capital markets operate in India, used to operate in India till then. So let's spend a few minutes in understanding what it was, and if you could bring the slides up, please. Yeah, if you can move to the next slide. Thank you. So prior to NSE's incorporation, that is prior to 1994, there were more than 20 regional stock exchanges in India operating in respective regions, and markets were controlled and managed by a close group of people, and markets were accessible to only a few. Trading used to happen in an open outcry system on the floor. I'm sure you would be recalling all those images of a stock market where a lot of people gather and shout with the share certificates in their hands. And trading hours also used to be very limited during the day. There used to be a complete lack of transparency in traded prices. I'm sure participants from spring trading days can recall those experiences. Investors who buy shares used to get the stocks at the highest traded price of that day, and investors who used to sell stocks were assigned with the lowest traded price. Markets were fragmented at regional level. Markets used to be very liquid. The settlement cycle used to be very long. In fact, to an extent of T+30, which means if you buy shares today, you will get the share certificates in your hand after 30 days. Share certificates used to be in physical form, physical mode. So all those issues and inconveniences which were associated with physical share certificates, such as forgery, fake, theft, delays in transit, used to happen. All this actually led to lack of participation from institutions and FPIs. Also because of the restrictions which were there during that time. Now, moving on to the next slide, with the advent of NSE, So with the advent of NSE in the year 1994, a new era has begun in capital markets, and NSE has redefined the way capital markets operate in India. NSE was present in every significant milestone in capital markets. It was the first demutualized stock exchange in India, where the ownership and the management were in two different hands completely. So it was set up by leading financial institutions in the country. NSE set up VSAT network to ensure to reach of our network to the remotest parts of India. So trading was not confined to the pits. So NSE is the first exchange, in fact, to commence electronic trading in India in 1994, thereby removing all boundaries and regional boundaries, which took capital markets to the doorsteps of the investors. Now, investors need not come to the stock market to really trade. It set up the first clearing corporation to guarantee the settlement of trades. Now, the markets work in T+2 settlement in equities, T+1 in derivatives, which means if you buy shares today, you would have those shares in your demat account in just 2 days. So NSE pushed dematerialization of shares through promoting the first depository, NSDL, in 1996, which is again a significant reform or a milestone in capital markets, as investors could hold shares in electronic form, and all their inconveniences or issues which were associated with handling physical shares certificates was done away with. In fact, NSE was fortunate to have the support of an equally young and forward-looking regulator in SEBI. So that really helped us. If you could go to the next slide. We just turned 25 last year, and over these years, members, investors, and corporates have rewarded NSE overwhelmingly. As you can see from the slide, we have more than 1,900 companies which got listed on our platform and have a collective wealth of 1.8 trillion USD, and more than 1,400 members who extend trading services as brokers to the end clients. We have more than 3.2 crores of registered investors with us, with more than 9,500 foreign portfolio investors, FPIs or FIIs, registered participating and trading. And we also have domestic financial institutions with an equal contribution or the assets under management of almost 400 billion USD. Now, moving on to the next slide. We are one of the largest, if you can just, yeah, thank you. We are one of the largest multi-asset class exchange globally, and we operate in 6 major products. There are sub-products under them, but to name the major product segments that we operate as, or the capital markets operate today, is equities, equity derivatives, fixed income, currency derivatives, interest rate derivatives, and commodity derivatives, which is a recent addition at NSE. And as we can see in the next slide, please. So today, as we speak, we are the world's largest derivatives exchange in terms of contracts traded. We hold top ranks in various individual product classes across the globe. We rank number 1 in index options and currency options. We rank number 2 in equity trades and currency futures. In fact, as we speak, we have executed 77 in 100 of the world's index option trades in the month of May. Our high-speed countrywide network allows more than 220,000 trading terminals to connect and transact with us daily. Derivatives based on NSE's benchmark index, Nifty 50 and Bank Nifty are the most actively traded contracts in the world. Nifty 50 index is the benchmark of Indian stock market that comprises top 50 companies listed on NSE, and it reflects the collective performance of all these 50 stocks. As we move on to the next slide, we would understand the key drivers in the lockdown period, how the market turnover trends have been across major products, different product segments that we operate, and how the investors' preferences are developing over this period while accessing the markets, how they are approaching the markets recently during the pandemic period or during the lockdown period. Vis-a-vis the previous quarters, we will have comparisons slides, and we will also try to understand how technology really acted as an enabler, played the role, what are the developments on the product fronts which open gateways for newer opportunities for investors to participate and invest. And also we will see how regulatory systems and guidelines have strengthened the markets, making it a more safer place for investors to participate in the markets and achieving the financial inclusion in our country. Now, moving on to the next slide. Yeah, we are actually, the entire industry is going through an unprecedented times, and almost all the industries and businesses are witnessing a slowdown in business. There's a lot of volatility out there in the market during this pandemic. However, capital markets were identified as one of the essential services and were included in the list of allowed services or business entities for conducting business during this lockdown. So we were not shut during the lockdown. The economic activity continued on the exchanges. Interestingly, as you can see from the charts, that Tennessee, we have seen a growth across all the product segments during this period. The bars highlighted in the red indicate the daily average turnover that happened, clocked on NSE during the lockdown period. And we can see a clear growth trajectory during this lockdown vis-a-vis the pre-lockdown periods. We saw a growth of almost 52% in the volumes of equity, that is the share market turnover. The 9% growth, excuse me, 9% growth in equity futures, hoping 74% rise in equity options turnover, and 6% growth in currency derivative segment over the period preceding to the lockdown. If we could go to the next slide to understand investor habits during this lockdown. Vintra, if you can, yeah, thank you. So investors participate in stock markets through various modes. The exchange provides need terminals, which is basically exchange provided front end for dealers to place the orders on the behalf of their clients. There is another mode of trading, which is also known as CTCL, which is computer to computer linked trading platforms, which are built by various trading members for placing orders on behalf of the clients by the member dealers. And then we also have the other popular modes of trading, such as internet-based trading, mobile trading, where the client places orders themselves. When we analyze the contribution made by each mode of trading during the lockdown period, I mean, vis-a-vis pre-lockdown period, we observed a significant growth in contribution of volumes from internet-based trading as well as mobile trading during these periods. The contribution by mobile trading, I mean, as a mode of trading, was almost 24% to the overall volumes at NSE, whatever volumes that we saw in the previous graph. So which is approximately 40% growth in its contribution during the lockdown period vis-a-vis the preceding period. And internet-based trading also stood at 13%, which is again a 33% growth in its contribution over the preceding period just before the lockdown. So when we look at participant-wise share, there are various categories of participants in the market, such as foreign portfolio investors, proprietary trading volumes, institutional members. So when we look at the participant-wise share from non-institutional, non-proprietary, their contribution, which means predominantly retail investors, that stood at almost 59%, which is again a 15% growth in its contribution numbers. This talks about increased retail participation, retail category as a category participation, and we saw almost a 24% growth in the number of new investors also who walked in or opened accounts at NSE during this period, which is again a significant. I mean, these are what we have observed, particularly during the lockdown period. So pretty interesting stats when the entire industry was going through a slowdown. Now, moving on to the next slide. There are, of course, we can attribute technology as the enabler for this growth and emerging new trends. So in our business, in our industry, in capital markets, everything revolves around technology and regulations. So NSE was the first to grant approvals to its members providing internet-based trading services, trading solutions in India. Mobile trading refers to the trading in the stock market using a mobile phone. Trading members offer mobile apps to their clients who can use them to place trades in shares, invest in mutual funds or IPOs, and even monitor their portfolio. While the market regulator approved trading through mobile phones way back in 2010, it's almost 10 years old story, but the traction was hardly visible in the initial years. And we have seen the share of mobile trading rising significantly, particularly during the lockdown period. as the usage has gone up significantly. As there is, more rightfully so, as there is increased penetration of smartphones, along with the availability of cheaper direct plans, excuse me. Sorry for that. So I was saying, yeah, there is an increased participation through mobile trading as there is increased penetration of smartphones, along with the availability of high bandwidth connectivity plans, better networks. And also there are a lot of trading apps compatible with mobile trading apps, which got developed by vendors during these times, which all really led to these, were the enablers during this lockdown. Exchange has been developing and sharing APIs, application protocol interfaces pertaining to the various trading platforms that we operate, also various user interfaces that Exchange operates provides to members, so that there's a flexibility which is provided to the market participants to customize and build trading platforms to their requirements. They need not depend only on the solutions which are provided by the Exchange, but they can build systems on their own. And among the major reforms and developments in capital markets, we must talk about interoperability for clearing corporations. That happened in just last year. It finds a prominence place immediately after, probably, I would say, incorporation of NSE and subsequently the depository system. This comes as the biggest reform or development in capital markets. Prior to the implementation of this interoperability, trades were executed on a particular exchange, which were getting cleared and settled only through the subsidiary clearing corporation of the particular clearing corporation, which is attached with that exchange. So participants who trade on multiple exchanges had to necessarily arrange for margins, capital separately at each of the stock exchange wherever that they are operating, and wherever they have membership. And their respective clearing corporations also, they were supposed to keep margins. So interoperability actually allowed market participants to consolidate their clearing and settlement functions at a single clearing corporation. Through interoperability, what has been achieved is market participants can trade at any of the trading platform or the exchange, but they can clear all their trades at a single clearing corporation. So this required a significant technology integration and changes in the systems architecture of all the clearing corporations, all the 3 clearing corporations in India, and also to have a consolidated risk management framework in place in a real-time basis is what is being done in the markets. Now, moving on to the next slide, when we look at recent developments in the product space, in the recent times there have been many product initiatives and approvals that have been received from the regulator SEBI, which helped us in providing access to the new investment opportunities for retail investors. To name some, and as you can see in the slide, government securities, treasury bills, and state development loans through exchange-traded platforms. G6 are normally available for retail investors. G6 are one of the considered to be the safest fixed income instruments, offering competitive returns backed by sovereign guarantee. Earlier, the access was restricted only to banks, institutional participants, primary dealers. To accommodate retail investors, the minimum lot size for the subscription is also brought down significantly. The second product that we can talk about, which has been very successful on the exchange, is sovereign gold bonds. So sovereign gold bonds are considered to be the safest way to invest. And if someone wants to invest in gold, I think I would say this is the best product available right now in digital form, as they are issued by the government of India. And you not only benefit from the possible asset appreciation, that is gold prices, but also assured fixed interest of 2.5% per annum, which is also being provided. Investments in IPOs have been made convenient through making investors participate through UPI mechanism for bids up to 2 lakhs. Now, participation through UPI has made life very easy for clients applying in IPOs. That also significantly brought down the timelines that are required for the process of listing and then IPO. Some of the other recent product launches include gold options on NSE with a standard 100 grams gold contract as underlying as a spot gold prices traded at Ahmedabad. The settlement happens on exercise settlement happens in actual physical delivery of gold. The second one is an options which got recently launched on interest rates. That also provides an efficient hedging platform to hedge the interest rates. And I think although irrespective of the status, everybody has an exposure to the interest rate risks. So these can be used efficiently to hedge the risk which is there in interest rate. And also the INR USD futures and options at NSE, IFSC at GIFT City, that is an international financial service center in Gandhinagar, Gujarat, is also an innovative contract for hedging exposures in Forex. Now, when we look at, moving on to the next slide, when we see the developments on the regulatory front, in fact, majority of the developments or innovations that would take place in capital markets industry are triggered from the guidelines or the approvals received from regulator SEBI. So one such significant development in recent past, which benefited the industry, is the new margin framework that is prescribed in equity derivatives. So in capital markets, margins are collected from market participant upfront as a risk management measure. But here, through implementation of the new margin framework, it really brought down the margin requirements on positions which are hedged. There have been new rules also issued by SEBI in handling the client collaterals pertaining to the clients, and also recently, as we speak, there's a circular which got issued last week on pledge and repledge mechanism guidelines. All these are aimed to make the markets a more safer place for investors and building their confidence. And also another, I would say, convenience which was being provided during the pandemic was where accessing offices physically has been the biggest challenge based on the existing rules. So the rules have been amended thereby allowing dealers to participate in logging into their trading screens from any place, from a different place than the designated location. Now, moving on to the next slide, particularly from investor focus activities in our agenda and vision for financial inclusion that has resulted in one of the largest investor education drives and literacy programs in the country, starting from schools, colleges, programs for investors of various groups, women, special groups such as policemen to senior citizens, initiatives such as free information tools and trade verification, which we provide on our website, making them empowered investors. And also through NSE Academy, there are a lot of skilling initiatives that have been kind of undertaken on various topics, and the certifications which are provided in upskilling the market participants. There's AI-based digital learning platforms which have been kind of introduced. So when we see, moving on to the next slide, so these latest developments also offer a lot of opportunities in capital markets for women who code in the areas such as information security, since information is the biggest asset in this business, and in fact for any industry. And new and innovative online platforms are being developed and offered by intermediaries. So there's a lot of opportunities there again in the space like cybersecurity and information security. All this becomes critical. So there are a lot of opportunities which are getting open in those lines in capital markets. There's a huge demand for coders in building prop trading strategies, people building AI-based trading solutions in the field of also API integrators or integration development for, the need for innovative front ends also is increasing. So that is where I see a lot of scope and opportunities for women who code. I would like to conclude my presentation here with this thought that Indian capital markets is one of the fastest growing markets in the world, and it is ever evolving with the support from our regulators. So there are ample opportunities that are out there for women who code. All that you need to do is learn required skills, upskill yourself based on the role that you want to take, whether it is as an investor, regulator, trader, or intermediary. Thank you very much. Over to you, Vinitra.
Thank you so much, Gauri Shankar, for the interesting session and taking time to share your valuable insights on the new developments that we are seeing and trends in the volume investor habits, right? So I would say the major key takeaway for me, at least, is that the fact that technology is playing as an important role in mitigation of the crisis, which also plays as an opportunity for the industry to become more innovative and more efficient, I would say. Thanks again, Gauri Shankar. So we have a small Q&A, live Q&A. We have some interesting questions from the audience, but in the have a couple of questions from our speaker to the audience, and you can win exciting prizes by answering them on the session chat. Gauri, would you like to post those questions?
Okay. So, what is the global ranking of NSE in index derivatives in derivatives? So that's the first question. Okay. There we get the responses.
Yeah.
Well, yeah. And the second question is, what is Nifty 50? What is Nifty 50 index?
Okay.
What is Nifty 50 index?
There we go. Okay, so moving on to the live Q&A as well, we had a couple of interesting questions from our audience, and we have picked best ones for you, Gauri Shankar. So which particular derivatives are highly traded during the lockdown, and how does it profit to organizations?
So index derivatives, when I'm talking about equity index derivatives. So Bank Nifty is one index, and Nifty is the other index. Bank Nifty is based on the underlying index, which comprises the 12 stocks from the banking industry. So all those people who would have exposure to the banking stocks, if they want to hedge their risk during the pandemic time or risk during these times, they would hedge it with derivatives. So these are the participants who invest in those underlying products. They would benefit from trading in these derivatives. And also there are quite a lot of trading strategies which are involved around derivatives that also actually led to the growth of these index derivatives volumes during this period. Hope that answers the question.
Thank you, Gauri. One more, probably we'll have a quick answer. Do you see any regulatory or ring fencing challenge to Indian financial markets incurring because of pushing data onto cloud offerings like other few Asian countries?
So, in fact, the data, when you talk about data, there are two types of data that we have. So we have our data company, NSE Index Services, which offers, in fact, this data to a lot of vendors who are based in and out of the country. So there are no restrictions as such. You know, people using DMA or people, all the FPIs, they use this data as an input for trading in the products which are available on the NSE. So I don't see any restriction there, but however, trading on Indian products or assets which are listed on in India, there are restrictions. There are some regulations which are prescribed by SEBI.
Thank you so much again, Gauri Shankar, for your valuable time. And we are almost ending our session at top of the hour now. So we have parallel sessions going on, 3 parallel sessions, and you can access them from the sessions tab to your left. That's the message I would like to convey to the audience. And thank you so much, everyone, for your active participation. Thank you.
It's a pleasure. Thank you.